I'm Rob Hamilton, co-founder and CEO of It Seems Like a Scam. I'm not going to touch it. So then a couple months go by. All my gaming buddies started mining Dogecoin on their computers. I downloaded and I'm like, okay, I get it. We're sending each other like joke transactions back and forth and mining. I was like, okay, I understand what's happening now. On the tech side, let me actually learn about Bitcoin. I wanted to go see the real thing. And I started going to the New York City Bitcoin Developers Meetup, NYC BitDevs. Back in early 2014, I started going to the meetup and just sitting in a room for like 2 years, just learning about how Bitcoin works. I picked up C++ for Dummies. I started doing programming and starting getting more interested into it. And Bitcoin's really what inspired and kicked off my interest in learn how to program. The pandemic hits and there's this new social audio app called Clubhouse. There was a lot of activity around the Bitcoin rooms. And it became pretty quickly apparent that on the technical side, I knew more than most people that were speaking on stage. American Huddle pulled me aside and said, hey, Rob, you should try taking a swing at starting your own company. And then the idea of insurance came up. Insurance itself, it's kind of the oil that turns the gears of capitalism. I went and scurried away and started typing up a couple slides. And then before I knew it, I had an angel round basically for the team, which was at the time myself, my co-founder, Becca Rubenfeld, and then our engineer, Nick. And from there, started building Anchor Watch, and we bundled that with a Lloyd's of London insurance policy. And so my advice would be, if anything around distrust of central banking and government bailouts and kind of crony capitalism speaks to you, I would encourage you to think about Bitcoin as a release valve in a system of math and code and rules and not rulers. I have a saying that Bitcoiners don't actually have any Bitcoin. They're just looking after their children's Bitcoin, right? It's an intergenerational mission and having a reasonable sense of being able to preserve wealth across time. And Bitcoin is the best answer that I've found to do that.
Welcome to Sat Chats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So, if you are brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart.
And I'm your co-host, Anna Bevan.
And virtuellement from Tennessee, we have got number 127, Rob, who is at the head of Anchor Watch, a place where you can go to get a really good insurance policy on your Bitcoin if you have many more Satoshis than I currently have, because I am the class of 2024 and I'm sweeping up small amounts of dust into a bin and cherishing it like Smeagol. But if you're an earlier fellow and you've achieved the level of wealth that I deeply desire for myself, you can go to Rob and get that insured. Correct?
That's a great leader.
Amazing.
Did I get that right, Rob?
I absolutely crushed it.
Yes. All right. Well, thanks so much. It's been great, guys. We'll see you tomorrow. Bye-bye. No.
Peace.
Rob, introduce yourself to our satillionaires in the audience, and then let's jump right into your Bitcoin story.
Absolutely. Yeah. So I'm Rob Hamilton, co-founder and CEO of Anchor Watch, based out of Nashville, Tennessee. My journey to Bitcoin was an interesting one. I think many people, when they first hear about Bitcoin, will ponder it and then ultimately dismiss it, and they come back to it later. In many things in life, to get like a life-changing habit, you have like multiple touch points before you finally like choose to make an adoption. And for me, it was at the start of 2013, I had a good buddy of mine who was telling me, hey, you're this Ron Paul and the Fed gold and silver guy. You should really check out Bitcoin. And I was kind of like, I'm kind of computer oriented. It seems like a scam. I'm not going to touch it. And so then a couple months go by. And then I was big into video games at the time. All my gaming buddies started mining Dogecoin, just launched. And they all started mining Dogecoin on their computers. So they're all using their graphics cards. We're all of our gaming computers. And I download it and I start mining Dogecoin. I'm like, okay, I get it now. I see sending and receiving transactions. We're sending each other like joke transactions back and forth and mining. I was like, okay, I understand what's happening now. On the tech side, let me actually learn about Bitcoin. Right. That was kind of like, once I actually touched and saw what this thing was, I wanted to learn, knowing that Dogecoin was like satire. I wanted to go see the real thing. and I started going to the New York City Bitcoin developers meetup, NYC BitDevs. And I was computer like skilled, but I wasn't a programmer by any means. And this is back in early 2014. I start going to the meetup and just sitting in a room for like 2 years, just learning about how Bitcoin works. There were meetings twice a month at the time, and just sitting there and listening and very rarely asking questions and kind of just like absorbing everything like a sponge. I picked up C++ for Dummies. I started doing like programming and starting getting more interested into it. And Bitcoin's really what inspired and kicked off my interest in learn how to program. And then, for about almost 10 years, I was just the token Bitcoin guy at my job. Bitcoin at this point is like $250. And I'm always like holding like a coin on my phone, buying lunch or like paying someone back in Bitcoin, like sending 0.1, 0.2 Bitcoin at a time to pay for lunch and like, errands and whatnot. And I was always that just token Bitcoin guy. And for me, this whole time where I was just the token Bitcoin guy, I was learning about Bitcoin, reading Bitcoin books, listening to Bitcoin podcasts, and just kind of going about my day in, day out life. And that was a pretty long stretch of time. And then the pandemic hits, and there's this new social audio app called Clubhouse. And for those that aren't familiar with it, think of it like a live audio phone conference, right? Everyone has like a little profile. You can raise your hand and be put on the stage with the speakers. You can, chat with everyone. But most people sit in the audience. And right when Clubhouse started, there was a lot of activity around the Bitcoin rooms. And I would sit there and listen while I'm working in the background. It was basically like a live streamed podcast of everyone just talking about Bitcoin. And it became pretty quickly apparent that on the technical side, I knew more than most people that were speaking on stage. And so I would raise my hand and I would go on stage and I'd explain some technical elements, how Bitcoin works with security and having a wallet and all these things. And over time, it turned into like my extended social circle where I was spending, 6 hours a day on Clubhouse. I'd go for a walk, I'd, go to the gym, and I would just always had Clubhouse on in the background. And through that, built a really good tight-knit community group of friends, names that a lot of people would know. NVK, founder of CoinKite, maker of the cold card, American HODL, and then like a long list of a bunch of different people. Brad Mills, if you know him. And really, it just became like this interesting social circle. And at the time, I was working as a data scientist and consultant at IBM. And I was getting pretty burnt out from the long hours, and I decided to leave my job. And so I left my job, and thinking about what I wanted to do next, I started applying for Bitcoin companies. And then pretty quickly, I was thinking about I have like a couple of job offers that are coming in. Let me consider something. And American HODL pulled me aside and said, "Hey, Rob, you should try taking a swing at starting your own company." I was like, okay, interesting. If I want to do that, how does that, I'm thinking if I'm taking investor money, I want to work on a big scope problem, something that could actually be like a really big impactful thing. I was very sensitive to building like a science fair project that like was a little cool toy, but like didn't actually have the sense of like a long-term vision of scaling to being a big profitable business. And then the idea of insurance came up, and then I went and scurried away and started typing up a couple slides. And then before I knew it, I had an angel round basically for the team, which was at the time myself, my co-founder Becca Rubenfeld, and then our engineer Nick. And from there, I was sitting in an Airbnb with Nick, coding and doing everything. Nick's my brother, by the way, coding everything up like the initial prototypes, and everything was really, the rest of it was history. This was March of 2022. And from there, started building Anchorwatch. And there's a longer vision, like there's a longer story about that, but then also just got into building an actual Bitcoin wallet, kind of using pioneering more advanced custody tech. And we bundle that with a Lloyd's of London insurance policy. So like that's the condensed story.
Yeah. By the way, the Lloyd's of London just that feels like a fat stamp of credibility.
Totally.
I don't even know. I didn't even know what Lloyd's of London was the first time I heard it, but I was like, oh, they got some kind of Lloyd's of London. Like that just sounds like some multi-century institution with starched collars is
really tall ceilings.
Yeah.
Lots of tall glass, tall building, marble floors, stiff collars, British accents, and they've been around since the 1680s.
They also, don't they insure private military companies?
They
too?
insure everything.
Yeah.
Everything.
I think you have to get Lloyd's of London insurance if you're a private military company.
Yeah. Because so the history of Lloyd's of London, which is just an interesting brief backstory, is that it started as Lloyd's coffee shop in the 1680s. And the reason why is because this is like starting like the continuation of the great expansion of the British Empire and spice and like ship trade exploration. So you'd have all of these seasoned ship explorers, and they'd all hang out at Lloyd's coffee shop. And you would have a upstart entrepreneur who wanted to go, do spice trading. And he would walk into Lloyd's of London. His entire net worth is in the ship. And like basically he's taking a big swing. And the idea was it was a very, very lucrative and profitable thing. But if the ship was wrecked or something went wrong, you would be financially ruined. So what you would have is all of the experienced people who had done many voyages would actually enter an insurance contract where they'd say, hey, you give us 15% of the cargo and you take this ship route, and we're going to check the backgrounds of your first mate and your quartermaster and like understanding the crew. And they would actually like understand, does this person have a reasonable chance of success? And they would do an exchange is like, we'll take 15% of your cargo. And if something goes wrong, we'll pay you back so you can get another ship. Right. And all of the people who were experienced spice traders would be the ones underwriting their name on the contract. And that's where the term like underwriting comes from. And that's from there, it started with like marine insurance, like ship exploration. And from there, it branched out to everything. The way I describe the Lloyd's of London building, if you think of like the New York Stock Exchange, and you have all of those screens and monitors, and maybe back in the 80s, people with pieces of paper saying buy and sell. Lloyd's of London is that, but with British accents. And instead of trading securities and like stocks, they're trading risk. And that could be property insurance, health insurance, life insurance, what have you. If there's a risk out there, they're like buy, sell, and trading it.
That's crazy.
That's awesome.
How do you buy, sell, and trade risk?
Oh my gosh,
that's a freaking concept.
That sounds intoxicating.
What? Like yeah. You're basically saying, hey, I'm gonna buy something that is being classified as riskier than I believe it actually is. So if I scoop that up and the risk is lower, then I'm going to do like, huh?
Yeah. So it's fascinating because like any other investment, you put your capital up as like a stake of like, I believe in this. Like if you buy a stock, right? And let's say the stock's at $10, your belief is that it's going to go up. And if the stock goes up, you make money. If the stock goes down, you lose money. Right. You can think the same concept with risk. Let's say you have a big portfolio bundle, and this is just speaking in general terms of like North American car insurance, or let's do North American property insurance, right? You're making a bet like, do I think there's going to be how many hurricanes this year, right? Is there floods? Like, what are the weather patterns? Like, what are the crime rates to understand for like arson and like all these different things, right? And you make a bet and say, I'll just pick a number and say, I think 20% of the people are going to have a claim, right? And then you run the actuarial math and like it's priced at 20%. And you're like, actually, I ran a bunch of numbers with actuaries to underwrite the risk. And they actually think it's like, 15%, right? This will, and so from there, you're able to insure the risk at 20, but it's actually 15. You get to pocket that spread of like a 5% profit across all of the premiums and stuff, right? So you can view it that way. And this is where reinsurance companies come in, and reinsurance companies insure insurance companies, because insurance companies have certain statutory limits of how much capital they can allocate. And so what they can do is they can offload some risk to someone else to be able to hold that, right? I think like really popular ones to think about are like, there's certain regions in the country where home insurance is really hard to get, like Florida, because of the hurricanes. Fingers crossed, so far this year, there haven't been any major devastating hurricanes. So this may actually be a year where people that are insuring homes in Florida will actually come out with a profit. Whereas when there's multiple big storms, they actually end the year at a loss, right? So you're constantly trying to figure out edges of data and understanding where risk sits and making sure the risk is priced appropriately. Ultimately, any risk can be priced, and there is a price. There's always a question of, is there a market clearing rate to actually build an insurance market around it?
So, did you hear insuring insurance?
Yeah.
And that's what Lloyd's of London does. They're the biggest reinsurer syndicate in the world.
That to me, without much knowledge, that feels like subprime mortgage type vibes, where it's like, hey, let's take something, package it up, then we'll put it in a container, then the container will go in a bag, then the bag. It's like you're getting upside down very quickly. But is that not the case where a reinsurer is not necessarily insuring an insurance company? They're just assuming some of the risk that the insurance company has already taken on so that the insurance company can take on more risk? Like what's happening there?
Yeah. So the way I would think about it structurally is that at the end of the day, the way Lloyd's of London works is actually you have these teams called syndicates, right? And it's a kind of like a group of insurance companies that come together to focus on a particular risk. And what you're trying to structure and understand, let's just start simple with an insurance company. Let's say you're able to write $1 billion of premium, right? You're able to take $1 billion in of risk, right? And that's because based on the size of your balance sheet. Maybe you get to a point where you basically at this point have capped out and you can't sell any more insurance. If you're able to have someone else pick up that insurance risk, you're able to move it off your balance sheet and risk, and you're able to continue writing business or reallocate your structure, right? The nature of how insurance works, and mentioning like the subprime market, that's an interesting one because it was a form of insurance, but it was a price insurance, right? Of like, are people going to pay their mortgages versus like, is my home going to be damaged, right? So you can have like just general property insurance and you can have financial contract derivative insurance. So they're all in the bucket of risk transferring and risk sharing, but the fundamentals behind them are a little bit different, right? So like I mentioned earlier, if you're talking about like home and property insurance, you're looking at, well, historically, what have been the rates for damages and claims on a home? Are there going to be any new changes in events and weather patterns that are going to cause maybe more hailstorms or floods or hurricanes, what have you, or tornadoes? You want to think about it in the sense of always trying to understand, looking at historical data, can you reasonably price this? And since it's a market, you always are finding other people that think they may have a better pricing edge than you. So you're always kind of like, just like in a stock market, right? You think like, oh, I think I don't even know, like, what is the Tesla stock price right now, right? If I'm just picking Tesla, like, it's $445. I think it's going to 1,000, right? So maybe I buy some call options and I go long, and there's other people on the other side of the trade saying, no, Tesla's going to go down to 300, right? And you're just constantly trading different perspectives with your balance sheet. It's fundamentally the same way with risk, but instead of underwriting one specific company and their financial performance, you're underwriting, will there be many claims or not on a particular type of risk?
Mm-hmm.
That sounds like gambling for gentlemen. Do you know what I mean? Like once I've achieved success and there's no more, I can't like experience the basic joys of life. I'm going to go increase the risk in my life and have fun, like just like trying to predict hailstorms. Like, bro.
Well, it's interesting because insurance itself, it's definitely a cliche saying that's been said before, but it's kind of the oil that turns the gears of capitalism. Think about it. If you buy a home, right, and your entire net worth is in that home, as most people are, if the home burned down, all of your wealth is gone forever, right? So would you rather, as a wealth preservation tool, buy homeowners insurance, and in the unlikely event something bad happens, you're not financially wiped out? So having people to actually allocate capital for insurance is one of those things that enable more free market activity. A perfect example would be lending. You actually can't get a mortgage in the United States unless the home's insured. And why is that? Well, if I'm the bank and I'm giving you, let's say, $1 million mortgage, I'm not doing that based on the value of the land. I'm doing it based on the entire property of the home. So if I'm lending you money, I want to know if there's a fire at your house and it burns the whole thing down, me as the person who's providing you the mortgage isn't ruined, right? So the idea of removing risk from a financial transaction allows for more financial activity to occur. And you can extend this to car insurance. It's an interesting thing too, just as an aside. A lot of the ways most Americans and people in the world really interact with insurance, it's like government mandated, right? Health insurance is government mandated. Car insurance is government mandated. So people often have like a very negative experience with it because they're being compelled to. And since it's compelled, it's less efficient of a market than it could be, right? Recently, for family reasons, I had to go to the ER and I walked into the place and I was like, man, hospitals are such a mess. Like, the last thing I want is more government involvement for this bureaucracy, right? But you're kind of just forced to based on the nature of how health insurance contracts work in the United States, which I'm not sure if you're aware. during World War II, there was a cap placed on salaries in the United States. And to get around that cap, what they did was they said, your salary is capped, but we're going to pay for your health insurance. It was a way to get around the legislation that was doing salary caps back during World War II. And then it was a one-way direction and never got undone, right? And so I empathize with people who most of their touch points with insurance on a day-to-day life is not so, I would say, like, cordial, like they're being forced to, because to get it, to have a driver's license, to have a car, you need car insurance and all these things. But just think about it from the sense of, if you have wealth somewhere, you want to protect your wealth and making sure that if something goes wrong with your asset, you're not totally ruined.
Yeah, that's actually really good for you to point out, because when I hear the word insurance, I think healthcare insurance.
Right.
Yeah.
And I think about how once each year I become enraged at the annual enrollment sequence, where I get confronted with the truth that as a man with a wife and 2 kids, I must pay $6,000 a year in premiums to potentially limit my total healthcare bill to $11,000.
Right.
And I pay this multi-$100 monthly premium. And when we finally need healthcare, we have to pay the entire cost because we haven't hit some kind of deductible yet. I'm like, this is a busted. This makes no sense. But if I had something of real value, insuring that against catastrophe, that actually does make sense. Mm-hmm. And it feels sometimes like many things that got started off with good intentions, like the insurance market or government currency, just over time become absolutely morphed in a not good way until, just the other day, I was like, why do companies provide healthcare for people? And it's, to your point here, it's to get around a wage control in World War II. It's crazy. Well, let me ask you this, Rob. If you're helping us and our satillionaires understand how a risk insurance organization is going to attempt to hold the entirety of that area's risk in its mind as it's trying to deliver these policies, help us take a step back and understand the risk in the Bitcoin space as a whole.
That's a great jump off point. So for the longest time in Bitcoin, all of the security practices were based on this concept of what's called self-insurance. And what does that mean? I'm bearing all the risk. If something goes wrong, I'm going to bear the cost. My keys, if I screw up, I lose the money, the end, right? That's just, if you're self-insuring, anything that you don't get insurance on, you're basically self-insuring. You're assuming the risk yourself and the full downside if something were to go wrong. And so to jump off this point, when Bitcoin initially started back in 2009, the only way you reasonably could back up your wallet was just exporting the wallet file onto a USB drive. That'd be the best you really could get. Over time, things called paper wallets came to be, where you could just take a printer, print out a QR code, send Bitcoin to the QR code. And then usually what you would do is you go full Office Space on it with the bat and the blowtorch, and you would just blow up the printer basically after you were done using it, because you never wanted someone to look at the memory of the printer ever again. And then over time, we started turning into probably a term you've mentioned before on your podcast, like a seed phrase, where you could take 12 or 24 English words and you can have those. And those were basically a physical backup of your Bitcoin. And then you could stamp them into metal. Then we got hardware wallets, where you have special devices that are used specifically for, used for security. I'm looking right here. I have a couple in arm's reach, right? You have a ledger, you have the bit key, you got the cold card, right? You have all these specialty devices that you can use to secure your Bitcoin. And these started greatly reducing the risk vectors and having controlled ways to access your Bitcoin. Maybe for those just that are learning about Bitcoin, just to explain it a half step back, the way Bitcoin works is that It relies on what's called public-private key cryptography. And the way I describe this is if you've ever been to a post office and you go into the post office and you see that wall of PO boxes, think of those as like the public key. Those are the Bitcoin addresses. But the only person who can open the mailbox is the person with the private key. And that's what these things do a really good job of protecting, is your private key. One level, just one click deeper, what actually a private key is, it's a number between 0 and 2 to the 256 power. So 2 times 2 times 2, 256 times. For context, there are more possible Bitcoin private keys than there are atoms in the observable universe, to talk about how big of a size of the number a Bitcoin private key is. And when you write a seed phrase down, you're basically deriving like a master secret number that you can then use to find all of your Bitcoin. And from there, we also started using things like multisig, the idea that you can maybe have 3 different keys and 2 of them are required to move the funds, right? And so over time, with this extreme sense of caution and discernment, understanding that you're ultimately responsible for the risk of holding your Bitcoin, the security practices and the hardware and everything around it got better and better and better to actually make it something that you can reasonably have a person just walking down the street and feel reasonably comfortable they can keep their money safe.
Crazy.
Yeah.
Crazy. I love that evolution over time of more and more secure options for your keys, right?
That's right.
And so if you go from having a single file on your computer, maybe it's that wallet.dat file.
That's right. That's right.
Which I only learned because I was making a question for TikTok Next Block, our live game show on Fridays where you play for 1 million sats. Because I'm class of 2024, so I'm
Right.
seed phrase guy. So the best you can do is, I guess, make a copy of that file and put it on a different storage device. Then you move to sending information to a QR code and then office spacing a printer. I did not get that step.
That was
That one, huh?
I mean, I definitely got the reference for sure.
See, so we have seen some stuff the same.
Yeah.
Right.
And then you go to the seed phrase, which is a wild development in Bitcoin's history, to be able to take this one number that is unique in the universe, effectively.
Right.
If there are atoms, more.
Mm-hmm.
You know what I'm trying to say?
When did that happen, though?
When did the seed
2014.
2014.
Okay.
That's when it just started. It just became a standard in 2014. It didn't get really wider adoption until like 2015, 2016, though.
Okay.
Bit 39, which I also
That's correct.
Making questions for the game show. So
You're
That's
learning
correct.
the game show is teaching me
so much.
So from there you go to, okay, maybe there's 2 of 3 where instead of 1 key, you can have 3 keys and you need 2 out of the 3 to do something.
Yeah.
And I also learned recently about something else, Rob, where it's like Shikari backups or something. Shamir, where that's like, there's like, it's like 1 key is broken up into 3 sequences or something.
Yeah. 3 shares. So you can actually take a single key and break it into 3 shares, and any 2 of the 3 can come together and remake the original key.
Which, dude, I mean, that sounds like Spider-Man 2099 right now, dude.
Bitcoin and cryptography, like mathematics, is magical. They're just like there's magical things you can do with math. It's all math.
Rob, it sounds like the next step beyond this multi-signature or even Shamir backup is basically finding a handful of starched collars who are drinking coffee and swapping risk, correct? I mean, the next step is to go and make sure that 1 or 2 of the keys are being held by guys who have 3 to 4 syllables in their first name.
It's actually very much related to that. So around 6 months into Anchorwatch, so we're talking now fall of 2022, there was a realization on the team that for us to get real large scale insurance policies and to get insurance companies in general interested in this, we had to kind of push the frontier of how Bitcoin security works. which is part of what we built with Trident Vault, which is our Bitcoin wallet software. We leverage an open source technology called Miniscript. It was originally developed by Blockstream back in 2018 and 2019. And I'll keep it at a high level, but it allows you to use Bitcoin today without any changes. And you can leverage extra bits of logic. Like, for example, we could have I could have a 2 of 3, and you can have a 2 of 3, and both of those must sign to move funds, right? That's not a 4 of 6. I have a 2 of 3, and you have a 2 of 3. Additionally, you can employ things like a time lock. So in Bitcoin, you can actually time lock your Bitcoin to be able to have it not be spendable until a certain block height or time is reached. And we leverage that so that for the length of your insurance policy, AnchorWatch is a required cosigner of your transaction, which allows us to protect, like if someone broke into your house and stole all of your keys, they're not going to be able to move the money, right? So it brings like this interesting security dynamic. But when the insurance policy expires, it goes to your full self-custody, right? Yeah.
Automatic.
I don't want to get, I'm happy to talk. I don't want to get too deep in the technical weeds of it all unless you'd like to, but it's an interesting set of tech that works today without a fork, works with all the major hardware wallets. Yeah, well, that's what we use.
How long are those insurance policies?
1 year.
1 year. 1 year. And then you have the option to kind of re-up before it expires,
sure.
Right?
Yeah, exactly.
I'm sure that's available.
So when I was preparing, Rob, my perception was, man, this company seems like one I would use if I had more Bitcoin than I do.
Uh-huh.
Sad tier. And if I were trying to kind of put a time lock on the safe, if I were wrench attacked, like when you go through the fast food restaurant and in the window when they're handing you the hamburger, it says safe is on a time delay. They're basically saying, look, dude, even if you try to break into this safe, it literally won't open for like 20 minutes and the cops are going to be there by now. Like, right. Is that the correct perception of AnchorWatch? Is like, look, man, let me put my Bitcoin somewhere safe and also protect myself from wrench attacks, because even if you kneecap me, you still don't get my Bitcoin.
Yeah, I think that's part of the premise, is that you want to be able to secure your Bitcoin in a way where if someone were to come and target you specifically, the funds still can't move, right? It's a really empowering concept. Like for a lot of our customers, when they sign up, we give them an option of how much do they want to spend every month. And that actually ties into your insurance policy, like your premium. Because let's say I want to be able to spend my entire balance at a moment's notice. That's obviously higher risk if you were to try and say, I don't want to spend it all. So we actually call this the HODL discount. And that actually lowers your premium cost. And we actually disable the send button in your UI. So if someone even got to you and like, okay, we're going to take your money, you would log into your AnchorWatch account and you can't send funds.
What?
That's wild. That's
right.
Wild.
Like there is no send button while you're using the HODL discount because you're not spending it all.
How much Bitcoin do I got to have just to get in to AnchorWatch? Because I saw that there were, I believe the term was policy minimums.
That's right. So for the insurance policy, our policy minimum is $250,000. So like 2 Bitcoin is our current policy minimum. I have no problem sharing this because in the coming months, we're going to be also launching uninsured custody. And with uninsured custody, you could just sign up with something less if you wanted to.
Okay. So basically you can help protect it, even though if something happens to it, if that spice ship sinks, you don't have enough Bitcoin yet to get that reimbursed, but you are taking steps to protect it more simply by right.
Yeah. So you're able to employ all of the upside of the technology and being able to keep you safe without having to manage an insurance contract.
Rob's like, look, I'm going to give you the route, okay, that you can take with your ship. All right. Yeah. Let me hang on. My coffee's coming. All right. Now, look, you want to go here. You want to go here. Avoid this area. Okay. Mm-hmm. And then, but if your ship crashes on the rocks, that's on you, bro. But you are, less likely to crash since I've given you the route.
Yeah. And it's interesting too, especially for when we launch the uninsured product, we can have it set up in such a way where it's like you sign and AnchorWatch signs. And then after a year or whatever, it goes just to your self-custody. So at no point can you ever be rugged by a counterparty, right? You can just have like elevated security that defaults back to your own self custody, which is a different dynamic than if you put your money at a custodian. You have to log in and like do the withdrawal and hope they have the coins. Or if you're ultra high net worth, you get on the phone with your account manager saying, hey, I want to move some Bitcoin out. You don't have to trust that they have the Bitcoin there. You just know your Bitcoin will ultimately go back to your full self custody control when the time lock expires.
And that's through like an automatic.
Yeah, the time locks. Just how the time locks work. It just automatically happens on the chain.
Yeah.
That is very interesting.
So let's imagine I have one Bitcoin. One Bitcoin. Here we go. It's worth 125K right now. Okay. I give it to you uninsured custody style because I want those levels of protection.
Mhm.
Bitcoin goes up because that's just what it does. And I cross the 250K threshold with the one. Can I then call you up and say, all right, brother, now what I gave you does meet your policy minimum. Can we go ahead and get it legitimized?
Yeah, absolutely. Yeah, absolutely. You could just give us an email, shoot us up, hit us up, and we could easily, it'll be a nice flow to actually to kick that off within your account. But yeah, of course, we'd be happy to earn that business.
Now, the Trident software, that wallet, I'm only allowed its use when I'm working with you. That's not something I can download on its own and rock out with.
Not today. A huge shout out to the guys at their company is called Wizard Sardine. They have something called the Liana wallet. That is fully open source. You can download that and you can use it to your heart's content for free. And they employ the stuff I'm talking about with the time locks and everything. So like there are options out there. Totally. We're going to probably release some software that like in the event we no longer exist, our servers are gone, you can just take your backup file and when your time lock expires, pull the money out without having to talk to us. I just think that's good service to kind of provide that full customer experience and let people make sure they can touch their money no matter what when that time lock expires.
Right. Because that's an open source piece. They could potentially pilot that themselves, but behind Anchor Watch is Lloyd's of London, and there are at least 6 men named Ashley.
Last I checked, I think it's 7. Yeah.
Right. They can back you up, dude.
That's right.
All right.
That's right.
And that's important. It feels incredibly credible. I'm just dunking on the UK right now. Sorry, y'all. United Kingdom, man.
Oh, man.
They've got a lot of history.
They do. Indeed.
So let me ask you one more question. You know, your Bitcoin story, has gone on this big fat journey where you heard about it. Maybe you didn't fully grasp it. You came back to it later. You started hanging out in the meetups. This was very interesting to hear that you were inspired to learn how to code and how to program based on Bitcoin. Bitcoin inspired me to learn more about money, the history of money, how things are valued, the impact of good money on architecture, artwork, societies.
Yeah.
And eventually I just had to come talk about Bitcoin all day. When you think about your journey and you think about someone in the audience who has not yet stacked their first sats, what's that nugget of wisdom that you would give to them to try to get them off the fence to become a Bitcoiner who has stacked their first sats?
Yeah, that's a good question. For me, I think Bitcoin for every person who gets into it is a very personal journey. Like it speaks to their values. And I think when you're evangelizing and talking to people about Bitcoin, I think it's important to meet them at their level and what their experience they're going through is. For me, I was very much radicalized with a distrust of central banking and the financial system during the Great Financial Crisis, right? When I was sitting there watching Congress vote to bail out banks who mismanaged their risk, and instead of going to zero and going bankrupt, they were giving my family and my own tax dollars to make them whole. And they weren't even using the tax dollars. They were printing money because there weren't enough tax revenue collected to bail them out, right? That to me was very personal in my relationship and the role of money in a society. And for me, what spoke to me about Bitcoin, it was a system of rules, not rulers. And it was anyone can participate in it. And if you follow the rules, you get to protect your wealth. And so my advice would be, if anything around distrust of central banking and government bailouts and kind of crony capitalism speaks to you, I would encourage you to think about Bitcoin as a release valve in a system of math and code and rules and not rulers. And there is a more just financial system that's available out there. And I still think it's very early. If you think about the hundreds of trillions of dollars that exist out there in global wealth, Bitcoin's at $2 trillion. I view it from a long-term perspective. I have a saying that Bitcoiners don't actually have any Bitcoin. They're just looking after their children's Bitcoin, right? Like it's an intergenerational mission. And of course, there's probably some fun hedonism and enjoying some nice things along the way with your gained wealth. But for me, it just very much speaks to this is something that I work on. I've put my financial life savings into because I am thinking about my children and my grandchildren ultimately, and having a reasonable sense of being able to preserve wealth across time. And Bitcoin is the best answer that I've found to do that.
Let's freaking go.
Yeah, I love rulers or rules, not rulers.
Yeah.
I thought that was great.
Yep. Yeah, that speaks to me really, really hard because the rules-based economy of Bitcoin is imminently and plainly more fair than the system that treated me to the .com bust, Y2K, war on terror, financial crisis, pandemic. Like, dude, as a millennial, Rob, I always say the 90s rocked and then we got rocked.
That's right.
You know
That's
what I mean?
right.
Dude,
Yeah.
the 90s. Pods? Anybody? No, Pogs.
Pogs.
Dude, were you slamming Pogs
Always.
back in the 90s? Yeah, dude.
Yeah.
What are pogs?
I was too chicken to play for keeps, man. I was like, no, these are my Pogs. Let me get my Pogs back.
That's right.
I could have been slamming for Pogs, man. So anyway, you didn't play Pogs.
No.
Anna Bevan. Anna Bevan probably had a kit and caboodle, dude. Kit and caboodles. They were like makeup.
Easy bake oven. Kit and
All the
caboodle.
easy, dude. And what about creepy crawlers? It was
Creepy
like-
crawlers.
Yeah, dude. The 90s rocked.
Wow.
And then we got rocked.
Yeah.
So
Some of us are still getting rocked by these references.
yes. And there was something else you said too, Rob. Like, you know, I'm famous in and among the team here at Sat Chats for only setting goals that are impossible to achieve. The only goals that interest me are ones that I know we cannot achieve. And the idea of stacking sats for my kids, for my grandkids, for my great grandkids, like not even being able to achieve what I'm going after all the way up until when I'm dead, that lights me on fire. Like, let's absolutely go. I love that intergenerational, you know, it just feels fantastic. And I feel like for the first time, the average everyday person can achieve, I was going to say generational wealth, but that extra bit, intergenerational wealth, that's what's up.
Yeah.
Yeah.
Right?
Absolutely. I view a lot of when we got rocked after the 90s was a breaking of the intergenerational compact that our parents are supposed to leave a better world for us than the one they started with. And I think right around 9/11, that started falling apart. If you're going to pick up a moment of when the 90s vibe ended, and it went downhill from there. Great financial crisis, COVID lockdowns, like pick any of your major events that have happened since then. There's been a fundamental break of that intergenerational compact. And I think Bitcoin is the answer to end run around the corrupting institutions.
Let's go. Let's go.
Yeah,
right?
that's great.
You don't have to be an Archibald or an Ashley anymore.
Or a fifth or a sixth.
Right?
That's right. That's right.
So there's clearly more to Bitcoin than we will ever fit into a single chat about sats. So we do ask each of our guests if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. Would you be willing to do that for us?
Absolutely.
Let's go. Okay. Now, what do you think will be the case 9 months from now? Because it's basically like what is that? July of next year. What are some of your predictions, personally or professionally or Bitcoin wise, whatever, man? Nostradamus moment.
Let's see. I mean, if we're anything loosely following previous cycles, we're going to be, I think, hitting like a peak mania moment. If I had to guess, like kind of like the crazy moment where everyone sees a huge surge in adoption of their podcasts and content and brokerage account activity, people getting price exposure. I'm not sure if we're going to have the same level 80% drawdowns just because of the size of the capital that's coming in here at this point that's just buying and not selling. I think they have a stronger sense of setting the floor. Cross Anchor Watch will be alive, rocking along, humming. Hopefully 9 months from now, have a mobile app out. That'd be pretty nice. I want to be able to kind of expand that on the feature set. Yeah. And I think for me personally, maybe
beard,
maybe a beard. Maybe I'll go into a facial hair because I had a beard for a good long while.
Yeah.
I decided just to go clean shave for a bit, but maybe I'll grow back the beard. That's a good one.
Dude, I mean, as soon as I could grow a beard, I did it. All right, so let's flip it over to our for Ithaca Hummus.
So our founding sponsor is Ithaca Hummus. If you are a hummus lover, this is going to be the only hummus that you will ever have. So we are going to act as your taste buds today in the studio to taste the lemon garlic.
Cheers.
So this lemon garlic,
So good.
so good. Very garlicky, very lemony. And one of the things that I think is interesting is of all the flavors that you could choose to do, this was the first one he did, as you mentioned earlier.
Real clean.
Yeah, because it's totally different than the original, which was his fourth hummus that he made.
So there you have it.
I'm a huge hummus fan. That's lovely.
Yeah, you should.
I'm going to go check it out now, see if I have it in stock at the store.
Yeah, there you go.
Yeah.
There you go. Ithaca Hummus by the dip.
Yeah.
That's my unofficial. That's what their slogan should be, at least for Bitcoiners.
That is not what it actually.
That's not what it is, but that's what it should be.
Your comfort zone.
Exactly. Holler. So
Yes.
let's make old Robert over here his offer for coming on this show.
At Sat Chats, we believe in value for value. And in exchange for your time and coming on our show, we'd like to give you an offer to choose between $50 in fiat or $50 in Bitcoin, which at today's exchange rate is 40,950 Satoshis.
Oh, I'm taking the Bitcoin all day.
Yeah.
Yes.
Let's go. High five. They're looking at that US dollar bill in London. They're like, it's too risky. They're like, it's too risky. I'm not insuring that one. That ship is sinking. They know that one. They're like, it doesn't matter what route we give it. That ship is going down,
there are a
period.
couple holes in it.
They're like, ugh. So 40,950 sats for Rob. You bring our show's scoreboard to 124 who have stacked the sats, along with how many would you guess have chosen the cash here? Because I know you can't see it in the shot.
Is it like 10?
It is 9. It is 9
Nice.
who have chosen the cash. And we're going to work on them when they come back for their Bitcoin baby updates. We're just going to keep being patient.
Yeah.
Love it.
Rob, where would you want to send our Satillionaires to engage with you and Anchor Watch?
Yeah, I'm Rob1Ham on Twitter, ROB, the number 1 HAM, anchorwatch.com if you're interested in learning more. Also, just shoot me an email, rob@anchorwatch.com. I'm usually pretty quick for people who shoot me a note. Love to, answer any questions you might have. You don't have to be an Anchor Watch customer. Always just an open door to talk to people that are interested about Bitcoin.
Now that's
awesome.
That's a big drop.
Yeah.
Normally, dudes at the top of companies are like ensconced in multiple layers of "you can't reach me," such as myself. And I like that you're like, dude, just hit me up. Real leaders are like, dude, just hit me up. You know what I mean?
That's really funny.
That's
All
right.
right. So, guys, if you enjoyed Rob's episode, subscribe to our show here on YouTube. When we reach 10,000 subscribers, we're going to drop 2 million sats on one of your heads to say thanks. And we're hoping we can do that by Christmas of this year, aka Yule. So you can support the show. You can sponsor the show in other ways. It's all in the show notes for you. Tune in every day at 11 a.m. for more episodes just like Rob's. Fridays at 11 a.m. is TikTok Next Block, the live game show where you play for 1 million sats. It is ridiculously fun. We've had 2 reach the 1 million sats question so far. Neither of them were successful.
They got wrecked.
Maybe you will be the one to win 1 million sats this Friday. Thanks so much for watching. Remember, Sat Chats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. We'll see you on the next one. Until then, keep stacking those sats. Bye-bye.